Okay, welcome everybody to the new and improved Cigar Lounge channel, where we have an audience and speakers getting very fancy now in this new thing. So, and speaking of speakers, we have a very special guest today. Uh, she needs no introduction, but I will give her one anyway. Tammy, she has been such a huge supporter of retail traders in the options community over the last couple of years. So many people have come to our community, have come to options via her presentations and the way she lays out things. So we are so excited to have Miss Tammy Chambless today. Thank you so much for being here.
I'm glad to be here. Thanks for inviting me.
Yeah, and I will tell the quick story. I'll never forget the day I went over to Rusty's house because we were going to demo Option Omega to Tammy Chambless, and it was one of those, we were like painfully nervous, and she was one of the kindest people I've ever seen in my life. So thank you for that.
You're welcome. Well, you've had a great product, so
Yeah.
not much bad to say about that. I was just really impressed that some zero DTE retail traders developed a tool like you guys developed. It was amazing to me. So more power to you.
Well, hey, I appreciate it. So I feel like, you have given so many presentations and you've done so many podcasts and you're just so well known. So I don't want to belabor the point, but I would love, if you're up for it, of just
Mhm.
tell us a little bit about who Tammy Chambless is.
Who I am. Well, I will. I'll just tell you some personal bits of information that I haven't shared with other people, so you guys get something new. I have shared in the past that I was an architect for, I think I worked for 38 years total, and retired about 5 years ago. Did mostly commercial work. Was a principal in a architectural firm in Dallas, and we had about 130 people, I think, when I left. We started with about 15 people, so we grew that business. And it was fun. I loved it, and it was a tough decision to retire. I was trading part time when I was working. I started trading probably around 2005, 2004, 2005. I took some courses with Optionetics, expensive courses, and I hated it. I hated every time you turned around and you wanted to, like, they'd teach you a little bit. And then, okay, well, you want to know the next bit of information? It's going to cost you $3,000. I hated that. So I've I have always been the type, even when I was a kid in school, I was pretty quick to catch on, and I would always help others who maybe didn't understand it or weren't as quick to catch on. So I enjoyed teaching others and kind of helping them see how to do things. So that's kind of always been in my nature. So I just took that and applied it to options. I did the same thing when I was in business as an architect. A lot of what I did was training, teaching. I even was on our investment committee at our office, and I would give seminars on 401ks and what they are and how they work and things like that. So I just enjoy sharing what I've learned, and I think that I have a way of sharing things that it makes it understandable. I don't try to complicate things with fancy words and fancy terms. I just keep it simple, make it very approachable. And things are complicated enough. No need to make it even more complicated. So that's just always kind of been my nature to share information. And so I've been doing that with options. When I retired, I started trading options full time and had much more time to devote to it and do a lot of back testing. I've always been a back tester, and I think that has it's one of the things that helped me the most in my options trading was not just randomly put on trades and see how they did and lose money in the process, but take an idea, test it, see if it was worthy of trading with real money, and then trading it with real money. And, making those decisions before I ever risked real money. So I've always been a great back tester with whatever tools I could scrounge together. And I tell you, I was starting to back test, 10, 15 years ago with some very crude tools, and it just was very difficult. And almost like OptionNet Explorer is, if you're familiar with that, where you have to enter the trade and then step through the data to see how the trade performs. And I have spent, weeks on end running through a back test doing that. Just enter the trade, step through it, see how it does, record it in a spreadsheet, and then go on. And I have many memories of being places, camping trips where I was with my dad and I was back testing. He was like,
Wow.
"What the heck are you doing?" And well, let me just finish this back test.
Oh yeah. Oh
So
yeah.
so it's always been something I've enjoyed, but I didn't have the programming skills. So, I've thought about learning programming, but it's like a whole nother road to go down, and I just never got over that hurdle. So I'm very thankful to guys like you who create things like Option Omega to be able to backtest. And really, until you guys came along, there was no backtester that used zero DTE, or you could use for zero DTE strategies. So many of them were were built with end of day data, and that's just no good when you're doing a zero DTE strategy. I was using end of day data when I was trading 7 days to expiration options, and even that. So I'd have to look at the day after I looked at the end of the day and see, is there anything that happened on that chart that would have stopped me out, and then record that as a loss when, it was just a very tedious way to do it. So,
Yeah.
but a little about me beyond trading, just because you gave me this opportunity.
Please, please.
um, I am also a metal worker and jewelry maker, and I do welding. I love to learn things, so I think it's why I'm interested in options. I'm always learning something new, but I'm always open to learning something. And I took a welding course with a buddy of mine, learned to weld. And the reason I did is because I was making jewelry and my pieces kept getting bigger and bigger. And I was what you call soldering with jewelry. It's like using brass and a soldering, not like electronic soldering. It's using a torch, but you just call it soldering when you're doing jewelry and gold and things like that. But it's the same technique. It's just a bigger flame and bigger tanks and stuff. So I was doing gas and then acetylene welding, and then I got an arc welder, and so I do that for fun. I haven't done it in a while because I've just been so busy with options lately, and generally that's good in the spring and fall, but not so good in the summer or winter because I do it outside, so
You know,
it's
burn your head off during
yeah.
those Dallas
I,
summers, I'm sure.
yeah, I like to bike ride. Got I got an e-bike last year, best thing ever.
Oh
Man,
wow.
that is great. I love it because I can take much longer rides than I could before and know that I'm not going to get exhausted,
Yeah.
by the end of it. So it allows me to go on some long, 30-mile bike rides with pretty easily. So
I absolutely love you are the type of person that's going to live till they're like 145
I
because
hope so.
I
Yeah.
I love that I love when people just curiosity goes beyond
Yeah.
Google. when
Yeah.
they just go deep into something, for
Yeah.
months or years at a time. And so
Yeah.
I love that. I want to back up a little bit. I was
Sure.
thinking the course that you took that was very expensive, and they were trying to get you bamboozle you a little bit from course to course.
Yeah.
What if you remember? Do you remember kind of like in general what strategies they were running and
Yeah,
things like
it
that?
was what they taught at first, and this was around 2004, 2005. So volatility was very low at the time.
Hmm.
So the first strategy they taught was debit spreads. And so, you pay $3,000 to learn how to do a debit spread. And then I took another course and learned credit spreads. And then this was Optionetics. They're no longer around, but they were. There was it back then. This is pre YouTube and pre. I mean, it was basically you had to go to a book to learn options, and it was, I didn't want to do that, but I just happened to get a mailer from them, and they had a little free seminar you could go to, and they talked about a strategy, is basically a straddle, where you buy a put and you buy a call, and if it goes up you make money, if it goes down you make money. I was hooked
So
instantly. I
simple.
was
So
hooked.
simple.
Yeah, so simple. They didn't tell you that you got to overcome the cost of that straddle,
That's
but
right.
it seems like, hey, I can do that. So
Yeah.
it's funny when I talk to friends about options and they don't understand them, I use that example, and it hooks them too.
Oh yeah.
So I have a friend. She was a principal. She and her husband were principals at our architectural firm, and I told her about that, and she said, "Well, I want to learn that," and so she retired too, a little after I did, but. So I taught her how to trade. She had never even traded before. She didn't know stocks, anything.
Oh wow.
So from scratch, I taught her. She was doing my old zero DTE strategy: enter in the morning, sell Delta 5, sell the side that we're moving away from, that
Hmm.
kind of thing. So,
Hmm.
um,
What
and,
in the?
and
Oh, go ahead.
yeah, well, she just caught on very quickly. I told her I don't like to teach the basics. I like to help people out. Once they have a little bit of knowledge, I'll answer their questions. So I told her that I'm not going to teach you, but I will answer any question you have. So she did that, and she took the time. It shows me that she's willing to take the time to learn, and
Yes.
then I'm willing to help you out if you're willing to take the time to learn. So
Yes.
that worked good. So you were going to ask something, but
Well, I was just
sorry.
so you went down that journey and then did spreads, and then you mentioned 7 days. Did you start? Did you go longer out than 7 days, or was seven kind
Yeah.
of your first foray into it?
No, I started with like 45 and 60-day options.
Okay.
I pretty quickly after I learned iron condors, because iron condors are kind of the same idea of you've got a wide area in which you can make profit.
Mhm.
I liked those kind of trades. So I started out with 45, 60-day options. I would sell an iron condor whenever the VIX was up 10% or more in a day. So I'd just wait for that. The VIX pops up, I'd sell an iron condor and then just collect money. And it worked most of the time. Occasionally I'd take a loss, and but most of the time it was pretty good. And this is not using stops or anything. This is just, put it on, because at the time I hadn't figured out about using stops. So it's, that curiosity has always kind of driven my trading. Like, well, what if, like, I'd take a hit or two and I'd think, how can I avoid taking this loss? What is there that I can do to avoid the loss or mitigate the loss? And so I would just, that's when I would do back testing. I would just run tests and see what worked and see if I could, add a spread or something. And so I really hadn't cracked that nut yet until I was trading shorter and shorter duration. So I was doing, and I was doing a lot of other things too, in addition to iron condors, but that was one of my favorite trades. I was doing calendars, and I love calendars. And there used to be somebody on YouTube or on the internet that he taught double calendars, and I learned those from him. I don't think he's around anymore,
Mm.
but this was early on. And so I learned double calendars from him, and I liked those, and I was doing those for a while, but still on those, occasionally you'd take a hit,
Yep.
you'd win some, you'd lose some. That was always the case.
Yeah.
And I was, I like uh, there's a guy that was an investment advisor, and he just would always rib me about trading options. Like, what would he say? It was like a great way to make a small fortune out of a large one, by
Yeah.
trading options. Like you lose a bunch of money,
Sure.
and oh, it just grated on me because I felt like the possibility was there if I could just figure it out.
Yep.
And so I just kept at it. And thank goodness I did, because there were so many times I was discouraged, and maybe he's right. Maybe you just
Mm.
can't make money trading options. And it was it was about 2017, 2018. Um, I hooked up with David's son, and he and I and Bobby Gaines, and there were some others. We
Yeah.
had this kind of think tank, and it was great. It was a lot of exchange of ideas, and I was doing, I'd found Tasty Trade in the meantime. So I had started watching their videos and selling credit spreads, kind of their method, selling 45 days to expiration credit spreads, and doing okay, but occasionally I'd take a big hit. And then David's son was the one that introduced me to 7 days to expiration. So I was trading about 30, 45 days to expiration, and he showed me that if you trade 7 DTE, you can make more money per day in trade over that same 30-day period with doing 4 trades instead of doing 1 trade. So I started doing that, and that was good. Thank you, David, for showing me that. And
Shout out to
and
David.
then he was trading 7 days to expiration. Both of us, or all of us in that group, there were 7 or 8 people in that group. It was just a little messaging group prior to Facebook, and I think we found each other through one of the early Facebook groups. But he kind of gathered some people together, and then we all started just messaging each other. Sometimes it was pretty heated, but it was fun.
Oh, I
And
bet.
yeah, and so I just kept trading shorter and shorter time periods, and I was doing those 7 days to expiration trades, just selling. And I started selling on RUT. I was doing iron condors on RUT as well. SPX was a little big for me at the time. SPY was a little too small. RUT was just right. So
Mm.
um, I was trading on that. It had enough volatility that, you could get some good premium. But trading 7 DTE, it would go great for a while. You'd make a lot of money. And then one week you'd just have a overnight gap down or gap up against whichever direction you were trading. And I'd lose a bunch of months worth of profits. And it was so frustrating. And I
Yeah.
thought there has to be a way to protect against this. So that's when I started doing the back testing, and this is back testing the old way. And that's when I realized if you trade with a stop, and that can mitigate some of those huge losses. Just don't, if you use a stop, it will protect you from those losses. Now, with 7 DTE, you still have overnight risk, and so occasionally there would be still a big loss just due to the overnight gap, but at least during the day you could control your risk. And then oh, it was around 2016 when Monday, Wednesday, Friday options on SPX started coming out. And I remember when the only options available were monthly options. There were
Yeah.
no other options available.
Yeah.
And
Yeah.
so,
So
so that's why trades were 35, 45, 60, 90 days, because that's
yeah.
all you could do.
Yeah.
Well, well, when, I'd heard about the weeklies, and then when David's son got me trading those, I was into those. And then I was hearing about the Monday, Wednesday, Friday on SPX, and I started looking into those. And that's when I started uh, really kind of paying attention to zero DTE trades. And I was doing some other things too. It was actually on the Facebook group. There was a woman in that group who wanted me to mentor her, and I really don't do mentoring. I will help people out or answer questions, but I feel responsible for their results when I mentor. So I just can't do that. Um, so you make your own decisions. I'll help you, but do that. So she had heard about the zero DTE trades, and there were a few people trading them in the Facebook group, and and she wanted to learn what those were. Well, I was like, well, I don't know. They seem like what I was hearing was people were trading them and doing well, and then like my experience with 7 DTE, occasionally they'd take a big hit and lose all their profits. And so I looked at what they were doing enough. I learned enough about what they were doing so I could teach her that strategy. And in the process of doing that, I realized, hey, here's a strategy, zero DTE, where it's only on during the day, and your stop, if you use a stop, it can protect you. And so after that, it was just a matter of fine tuning where best to stop. Is it better to use like a 5x stop multiple or a half x stop multiple? What works best? So a bunch more back testing, and it was the selling delta 5 at the open using a 3x stop for a 2x net loss. That was the sweet spot. And, we looked at other deltas, we looked at all kinds of things. And man, when we found that, it was like pure gold. And that trade worked so well for so long.
Yeah.
And it finally was one of those trades that, as long as you followed the rules, and I'm very much the when I was learning to trade, I read the book about turtle traders, and
Hmm.
and I love that idea that you could take a high school student who knew nothing about trading, just teach them when the stock does this, you do this. And
Yeah.
they don't have to know what they're doing. They just follow the rules. It's like
Yeah.
a live trading bot.
Yeah.
And so uh, I forgot where I was going with that, but oh, it's rules based. It's rules based. So I liked that fact that a good set of rules would go a long way. So I could get the set of rules out there, let people learn those rules, and anybody could make the kind of money I was making on
Yeah.
zero DTE, and it was good money. So it was great. At the time we were dealing with the spikes in option pricing occasionally that blow through, and you take a 4 or 5x stop instead of a 2x or
Yeah.
2x loss.
Yeah.
And so there were challenges, but a whole lot less than just the whole trade going against you like it used to, and
For sure.
on other strategies.
Yeah, for sure. What's interesting to me about that, have you ever heard of Dan Sheridan?
Yes.
Uh,
I've never
so
taken his courses, but yes, he's very well thought of. I've
yeah,
attended seminars that he has given. Yeah.
we've had him on to a Cigar Lounge. He's
Oh, good.
I feel like he's the godfather in some ways. He's been around forever, and but I had breakfast with him this morning, and we were talking about 0 days because he said, "Who
Uh-huh.
do you have on the Cigar Lounge today?" And I was telling him your story a little bit, and he
Uh-huh.
said, "What's interesting is so he knows Sosnoff and all them, and he was saying what's interesting is how the tides are really starting to turn. That for
Yeah.
so long people looked down on 0, and some could argue
Yeah.
people still look down on 0 day, but I really do think it's a credit. David Summer's coming along right along with you, but I really do
Yeah,
credit some of those presentations you have, because I've just talked to so many traders through the years who, they heard about options, or maybe they had a little bit of knowledge like you're saying, but they just didn't know what to do with it, because to your point
yeah,
about options, there's just the possibilities are limitless of what you can do. And so
yeah.
your approach was just so rule based, and what to do and what not to do, and to get out, and the adjustment and things like that. And um, it's interesting to me now to watch. I think Tasty Trade just came out with a video someone posted a couple of days ago about 0 day.
Yeah, they're
Uh,
doing a segment. I'm watching it. They've had two sessions. It's on Thursdays. So
okay.
so far I am not impressed.
Well, I
It's
was
like
going to ask you.
they're
I haven't watched any of
yeah.
it yet.
Oh,
Yeah.
they're talking about buying zero DTE options instead of selling zero DTE
Uh,
options. They think
okay.
the only way to trade zero DTE is to buy them because of the gamma risk. And
Mm,
they're not big stop people. So
right.
they usually manage trades rather than use stops. Well, okay, yeah, if you're gonna not use stops, then go right ahead and
Good luck.
buy,
Yeah.
because that's what you need to do to protect your account.
Hmm.
And so they just I really want to send them a link to one of my videos and say,
Oh
hey
man.
guys, get up to speed. What you're teaching is garbage.
Yeah.
And I know people are emailing them about that hey, look at selling them, don't look at buying them, and
Well,
we'll see where they go. With their
yeah.
research power, maybe they'll find something good. So I'm
Yeah.
not going to poo-poo it yet.
Sure.
I'll watch it and just see how they do. uh, i have I have a lot of respect for Tom and Tony
Yep.
and what they've done,
Yep.
and to offer all that great training for free. I love that. Love
Oh yeah.
their willingness to contribute to the option community. And I think the retail traders are really coming along because of we've learned a lot from Tasty
Hmm.
Trade. We are where we are because of Tasty Trade. So I do give them lots of credit for that.
Yeah.
But that I think they're missing the boat on zero DTE. I think they've poo-pooed it and said, no, it's too risky, don't
Yeah.
do it. And now people are, they didn't want to add stops to Tasty Works because why would you need stops? We can
I know.
manage. And it was the zero DTE people emailing them saying, hey, we need stops to trade zero DTE. And then
Yeah.
now CBOE, I've been talking to CBOE, and there's along with Ben Decker and Kurt Durbin. We've been having a few conversations. It's been a couple of months since we talked to them last, but I was getting concerned because I kept hearing rumors that some of the volatility we were seeing in the market was caused by zero DTE. And I wanted to find out from the source if that's true, if they thought that this is concerning. Is there something about zero DTE that could foretell its demise? And if so, I didn't want to lead everybody down this path.
Sure.
So, but in talking to them and doing a ton of research, attending a lot of seminars, as many as I can, and there's some great seminars offered, like Interactive Broker, E-Trade, your brokerages, TD Ameritrade. A lot of the brokerages offer additional education. Well, anyone that talks about the greater global market, um, I'm I want to attend because I want to hear what they have to say. So, right now, zero DTE options trading has basically doubled in the last year, and as well as all options trading has doubled in the last 3 or 4 years. From I printed out some statistics. In 2019, the average daily volume was 19 million contracts, and in the first 2 months of 2023, the average daily volume is 46 million contracts. So
Holy smokes.
more than doubled.
Yeah.
Now, uh, I will tell you, zero DTE is only 2% of that. It is a small percentage. So the great majority of the options trades are on the NASDAQ. 41 million out of that 46 million are NASDAQ uh, options on,
The Qs?
Apple, SPY,
Oh, just the equities. I see.
CPS. Yeah, anything that you trade on NASDAQ, that's the majority of the options trades.
Yeah.
And so SPX is about 5% of all expirations. And so SPX 0 DTE is about half of that, so about 2.5%. So it's really a tiny percentage. And what I've heard is that people say that it's hedging. Like as we place trades in 0 DTE, the market makers have to hedge using ES. So they're having to buy ES options when we're selling SPX options, and that causes, as the fluctuations in the stock and we get stopped out, then it can affect the volatility of the market. Well, both CBOE and NASDAQ have assured me that is not possible. That it just is not. They say if you want to see the source of the volatility, it's the news, it's the interest rates. Like today, it's Powell speaking, it's inflation, it's the market we're in. We haven't been in a bear market in what, 10 or 12 years.
Long time.
And a long time. I think 2007 or 2008, 2009 was really the last big bear market. And so a lot of traders these days, they don't know how to trade in a bear market. They don't know how a bear market acts. They're used to VIX going up when the market goes down. Well, one of the things NASDAQ, hey, here's my cat, Charlie, is making an appearance.
Oh, say hi to the cat, everybody. I love that.
Yeah. he always, I think he comes around because he thinks I'm talking to him. He can't see any of you guys. So he thinks I'm just talking to him.
Yeah.
So Charlie's my trading buddy.
That's awesome.
Yeah. So where was I? So they just say that in a bear market, volatility is usually suppressed. Like the VIX doesn't react like it does in a bull market where you get these big spikes in VIX. So they think that the suppression of the VIX volatility and the expansion of intraday volatility is just purely a function of a bear market. And this is according to NASDAQ. And it was the head of the options trading group there and the head of retail options trading that they gave a seminar on this. So this was notes from their seminar. And so, yeah, go ahead.
Well, I was just going to ask, you were trading? I have a lot of questions about that. And if you guys, just side note, if you have any questions, Tammy, I don't know if you can see this or not, but there's a chat. There's a chat. If you click on the Cigar Lounge there next to the
I see. Yeah, I see it over here.
So if anybody has a questions, feel free to just answer. I'll stop and ask it for them. But one of the things I want to circle back around to those CBOE meetings you guys are having because it's super interesting to me. To back up for what you were doing, I was introduced to you when you were doing, and forgive me, I don't remember the exact mechanics of it, but around 2018, 2017, what was that trade setup?
That was the 7 days to expiration trade.
Okay.
We'd enter a short puts or put spread every Friday. Every Friday afternoon, we'd sell a put spread. And I think we were doing Delta 5, if I remember right. Maybe Delta 10. I'm not exactly sure. But yeah, we did that for a long time. David's son and I were doing that. And he wasn't using stops before I did the investigation on stops. So I was the one that taught him how to use stops.
There you go. I love
it. And he was reluctant too. He is very opinionated about his trading. sometimes he's not so open-minded, but he did listen to that. So
That's what he gets a lot of. What's funny about that is he gets a lot of crap now for using stops. So he's now the defender,
ah,
the defender of stops in some ways.
yeah,
But
yeah,
what? So there was around that time, and it might have been a little bit later than the you were doing a 0 day trade, and you're doing it, I believe, first thing in the morning or around
yeah.
first thing in the morning.
That was
Was
kind of the next step. Was
okay.
I was selling iron condors right at the open, Delta 5, somewhere between Delta 5, Delta 10. And I did that for uh, several years. And then I see someone, when can we invest in the Tammy Zero DTE fund? I will never have a hedge fund. I would feel too responsible. So I
I believe
just
that's
can't
Mr.
do
I believe that's Mr. Ben Decker, and that's a great.
it.
Uh, I mean, this is the joke of Cigar Lounge. Is I wait 30 minutes in to do this disclaimer, but for everybody listening,
Yeah, there
options
you go.
involve risk. They're not suitable for all investors. Everything we're talking about is backward looking and not forward looking. As always, consult with your financial advisor if you have any questions about options. This is not investment advice. This is for entertainment purposes only.
Yeah,
So,
yeah.
thank you, Ben Decker, for telling us
For
that.
reminding us.
No, that's right. So, anyways, you
Yeah.
continue, please.
So, so the evolution, so started with 7 DTE, then moved to that 0 DTE because just shorter and shorter time frames were becoming more and more profitable. And then I went off on a tangent a couple of years ago. I was giving seminars to various groups. It was during COVID. And prior to COVID, there were a couple of options trading groups in Dallas, and I'd given, half a dozen presentations to them. Every time I came up with a strategy, I'd give a presentation about it to them because it would help me really think through the strategy and codify it enough to be able to explain it through a PowerPoint to somebody. It's great learning experience if you haven't given presentations, but
for sure.
I like to do it for that reason, and I always try to include something new in any presentation I give. So I had given presentations on my enter the iron condor when VIX jumps up, 10% or more. I'd given a presentation on that. Given a presentation on butterflies, and given a presentation on the 7 DTE trades. And then when we came up with the 0 DTE trade or enter Delta 5, and that really was, I learned that from people in the Facebook group. And then I taught David's son. He'll never say that, but he learned from me. And he, different topic. But then after that, I was giving presentations, and COVID hit, and I had people were asking me to come there and give presentations. Well, when COVID hit, uh, all of a sudden people started reaching out on the internet saying, "Hey, we want to do a Zoom call with you for our trading group here in Orlando or California or wherever it was." And I gave a number of presentations. The early one of those was Singapore, and a guy had been following me on the Facebook group, and so that was one of the first um, presentations over Zoom that I gave was to a group in Singapore. Well, that one on YouTube, and I credit the Asian
Yeah.
community, the Asian trading community with this. That one went viral. It was
Was
amazing to watch
was that
how
wealth? Was that wealth and joy?
Wealth and Joy. Yeah,
Oh yeah,
Wealth and
yeah,
Joy. Yeah. And
yeah.
a great guy, Richard, can't remember his last name,
A
but
very,
Richard
very
was,
kind, a very
yeah,
kind man. Yes.
yes, he is. And great group. And evidently a lot of option traders in Asia that market reached. Well, yeah, that Wealth and Joy is one that a lot of people pick up on or had picked up on in the past. And so as soon as I saw how popular that was, then as I would evolve my strategy, I would put out a new video just to catch people up to what I was trading. So I don't put out many videos, maybe once every 6 months or a year on YouTube, because I don't want to repeat myself. And I just, I'd rather just put it in one big video, do it all at once, and then it's out there. And people can, I mean, those are long videos. More power to you for sitting through a 3 hour video. But at least people can jump on, listen to a little bit, then save it, go aside, come back and listen to a little bit more. You don't have to
Yeah.
do it all in a one bunch, but I do try to put everything you need to know about the strategy because I never wanted to be like Optionetics was, where oh, just wait till the next video and I'll teach you how to use stops or
Yeah.
whatever it was.
Right.
I wanted to put it all out there so you would have a complete strategy that you
Yeah.
could be using. You could trade what I was trading.
Well, and
And
you had the slideshows, and I've always appreciated about you. You don't put a lot of stuff out, but it's actually in my mind it benefits everybody because when you do put stuff out, it's a consequence, and that's
yeah,
the difference.
yeah.
You're not marketing yourself. You're not trying to
Yeah,
put
that's
stuff out
right.
just
Yeah.
so. That's awesome. Anyway, I interrupted, but
Yeah, no. So anyway, I started to give some Zoom presentations, and one of the presentations I gave was to a group in Orlando. Brian Terry in the options Facebook group, he connected with me through the Facebook group and said, I run a trading group in Orlando, and we need a presenter in whatever it was, October or something. Um, so I agreed to do it. I enjoy giving presentations and just sharing what I've learned. And so I gave a presentation to him, and he contacted me afterwards and said, "There's a guy who is a friend of mine who I know from this group. He was a he wrote programs for traders, for institutional traders on Wall Street. He's retired, he retired to Orlando and he saw your presentation to our group. He wants to contact you." And so, okay, I don't know where we're going with this, but anyway, he contacted me and he said he had a software that he had developed. And he thought at the time I was doing the zero DTE, enter in the morning, you don't know direction. And the way I was trading it was you kind of wait maybe 15 minutes and see which way the market's going to go. You trade the other side first, enter the other side, then you wait. And then maybe if it starts to turn, then you enter the call side or vice versa. However, you react to what the market's doing. So, it's not quite rules based. You're reacting to the market. Well, he saw that and he thought his software was very good at selecting, telling you more about direction, momentum, and things like that. And he was using it for 30-day options or 45-day options. He had never thought about using it for 0-day options. And so he connected with me and he showed me his software, and well, this looks interesting. I'm not sure because I'm not a big it's like technical analysis, but it did all the work for you. You didn't have to look at the moving averages or RSI or whatever and interpret. It kind of interpreted that for you. It took a
yeah.
lot of information and then put out signals. And so he and we experimented with it for a month or two, and it looked very promising. We were kind of doing back testing with it as best we could without, on 5-minute data, which is what I had at the time. And it looked good. It looked like it did improve results. And so that was called Pong. And and so I went down that rabbit hole for about a year and a half, and he just kept changing the program. We got a lot of people in Pong, and I'm so glad it just showed the support of the community to jump on and try it out. But actually, when we were live trading it, it back tested so well, it just didn't perform as well in live trading. And it took me probably about a year and a half to really admit that and say, I think I'm just not going to use it anymore and go back to doing my thing because
Yeah.
I was having much more fun doing my thing than kind of tagging along with what he was doing. and he kept trying to tweak the system. I mean, every week he had changed something. You're having to learn how to do it again, and it just didn't seem to improve things. Everything, it just never got to where it was really. I mean, if I had been trading my old zero DTE system, Inter Delta 5, first thing in the morning, I would have done better over those 2 years that I spent in Pong. So
What
I
do you
have,
think? What do you
yeah,
think that? Sorry to interrupt, but I'm just
no.
interested because you know you're so you get so granular with the testing and you do due diligence. What do you think was the difference between when you put it on live? Because that kind of gets in some ways to the question of like botting in some ways. Like what do you
Mhm.
think the difference was with that between the tests and the actuality of it?
And
Now
that,
it sounds like
yeah, and the
he
trading.
changed a bunch of stuff.
Well, as I think with any technical analysis, most technical analysis is based on what happened in the past. And I think that was the downfall of Pong, is it's looking at the past. It was trying to predict the future, but it just wasn't very good at it. And not enough to really rely on it. And I don't
Yeah.
know in back testing, I don't know if he just changed it so much from those early back tests. I mean, really, I think he was improving it, but it just never even back tested as well with the later
Hmm.
versions. And
Interesting.
so he kept saying, "Oh, well, we just do this, and we'll just make this, and look at this. There, you can't even find a loser if you use this strategy." Well, we'd look at it, and yeah, there were losers in there,
We can find
and
losers.
yeah, we can find losers.
Yeah.
And so it yeah, I hate that all that effort went into that. And but really I got to know a lot of great people through that
Yeah.
experience. There's a lot of people that joined that and followed along for a while, and they I was probably one of the last people to get out. There's still maybe half a dozen people, or not half a dozen, maybe 2 dozen people that are still involved with that. So he
Oh,
does
okay.
have a following, and that's fine. And it's a fee service. And that was another thing I felt. I had mixed feelings about charging for that. And so I told him I didn't want to be part of the company. I would be part of the group, but I didn't want to
Yeah,
I didn't want to run a business again. That's
for
too
sure.
painful. So
For sure.
I just was
Yeah.
there for the trading.
Yeah.
And so it was probably about 6 months ago that I pulled out and just don't attend anymore, and just started doing my own thing again.
Yeah.
And then it was about the same time that this multiple entry iron condor
Yeah.
uh, thing came along. David's son at the time was sharing his trade logs on his hedge fund with me, and I was noticing he was having to do multiple entries just because he couldn't take all his hedge fund money and put it all in the market at the open of the
Uh-huh.
market. And
Yeah.
so he had to do it in tranches and had to enter multiple entries. Well, I noticed that by doing that, he was basically spreading his risk out through the day, and
Hmm.
he would, maybe his morning trades that I would enter at the same time, maybe both got stopped out on those, but some of his later trades would survive. And so he
Hmm.
wouldn't have a full loss day. He would have, some partial wins, some partial losses, and it just
Yeah.
seemed to mitigate his loss. Well, I like that idea. And then about the same time, I think it was like groupthink. A lot of other people started doing that as well. And Kyle Leesman is one. A lot of these are people that I met through Pong. Kyle was in Pong, and he was developing back testers for us for Pong,
Yeah.
specifically for Pong. And and then Dan Yaklin is a friend of mine. He runs a trading group in Dallas, and he started doing some investigation on the multiple entry, completely separate from me. But the
Yeah.
idea of multiple entry on a zero DTE just started bubbling to the surface. A lot of people were working on it, so I can't take credit for initiating that. But I kind of jumped on the bandwagon early when I saw the benefits of it, And so now that's really what I'm a proponent of.
Yeah.
I in last May I put out a video of all of a sudden in this bear market, the zero DTE entering at the in the morning, Delta 5, just started not working so well. In December 2021 and January 2022, I just had hit after hit after hit
Mm,
of loss. And so I stopped thinking something's going on. Maybe this is the end of this strategy because no strategy is going to work forever.
sure.
I think every strategy is dependent on the market that it is created in. And
Yeah.
so if the market changes, you got to, change with the market. So something had changed in the market, and I think it was the increased intraday volatility that was introduced in the market because of the interest rate increases. Inflation was rearing its head because of COVID and supply chain issues, and the cost of oil was increasing. Also, worsening inflation because of the war in Ukraine. So, just a lot of things came into play to cause the intraday volatility. So finding a way to trade that intraday volatility it has led to the MEIC, the multiple entry iron condor trade. So I had started talking about it last May in a video, and then I put out a video in January and really went public with it. And I had been trading it for about 4 or 5 months at the time and felt like it was good enough. I was seeing great results, and it was good enough to let's get this information out there. So that's when I started putting out videos on the multiple entry iron condors.
Yeah.
So for those in your group who haven't seen that video or haven't traded multiple entry iron condors, um, go check out that video dated
Yeah.
January 16th. That's a good one. It's about a little over an hour long, and it's a good strategy.
If someone has that, if someone could pull it up for me, if you want to put it in the chat, that way it's here for everybody, and we can
Yeah, you can
make sure
link.
everybody has that. Yeah, if someone wants to do that for me. One of the things that's interesting about that is, yeah, people have adapted to 0 day, and what's interesting, what's cool about it is it's only the beginning. Like we're not even a year
Hmm.
into 5 day a week expirations,
Yeah, yeah,
and so there's so many possibilities, and that's one of the things that I love about you is that you're going to be probably on the forefront of finding some of those possibilities just because you never stop researching.
yeah.
um, One of the questions I want to get to two, we have two questions here real quick. With the IC type 0 DTE, did you ever look to see which side was getting stopped out more often?
I have looked at that, and I'll say generally it's pretty equal. I would have
Mm,
suspected it would be the put side in a bear market or the call side in a bull market,
yep.
but not necessarily. So
Right.
it's fair. It's more even than I would have expected. So that's why I just still am a proponent of ICs
Yeah.
because
Well,
because you never know what's going to happen, and you're prepared that way for either side.
that video, obviously people can watch the video, but when you're doing, do you stay, is your deltas the same each tranche?
No. Mm-mm.
Okay.
With the multiple entry on Condor, I'm credit targeting.
Okay.
So I target a minimum of $1.25 to a maximum of around two.
Okay.
And so it's anywhere in there. And I generally use a 25 wide spread, but I will adjust the width of the spread if I need to match the credit I
To
got
get the
on the
credit.
other side. So
Yeah.
it's a pretty flexible trade. I have noticed that tighter spreads tend to get stopped out less. That
Hmm.
bringing the long closer to the short does tend to protect you more. So that it's I've got a whole list. I have a notes to self on backtesting ideas like backtest this. And one of them was, in fact, one I just ran yesterday was look at returns on Mondays compared to other days because it
Hmm.
just seems like I make most of my money on Mondays. Well,
Yeah.
yes, Mondays on the multiple entry on Condor, they are in general better winning days, but not just slightly. Wednesdays are still good. Fridays are good. Tuesdays are the worst. So hence, it's fine with me to take this Tuesday off and not trade today and meet with you guys. And so, curiosity fuels a lot of my testing. So yes, is there something? What can I do to take advantage of this? And that's it's just a great fuel for what I do. Like I want to see like running calcs for fees last year if I traded SPY instead of SPX.
Mm,
What would my fees be? Because
yep.
it really is irritating that SPX fees are so high.
Yeah.
And man, CBOE is proud of that, and they're not willing to give that up.
I bet
Unfortunately,
they're not.
we
I bet.
have pushed them. In talking to Nasdaq, what they do is they increase the fee that they charge to institutions in order to provide the no fee for retail traders. So
Interesting.
so I suggested that to CBOE, and they go, not going to happen because the
Yeah.
institutions are complaining that CBOE fees are too high. So I think what's going to happen is there's going to be other products out there that like like NDX would be a good one. I mean, it's still controlled by CBOE, but maybe QQQ or RUT as they come up with zero DTE options. Hey, I'll trade RUT, and
Yeah.
if it was available on DTE trading, that would
Yeah.
be a good alternative to skip the CBOE fees, and
Yeah.
then because that's going to be the next thing is shopping fees for how we can do zero DTE on other instruments,
Yeah.
and,
For sure.
and uh, I know Nasdaq and other exchanges are paying attention to how popular the zero DTE options are. So I think we're going to see more
Yeah.
zero DTE options. The
Yeah.
other the other thing that's coming up that I'm seeing a lot of and I'm participating in is the bots, the automated trading. And I started using. I know that Option Alpha has had a trading bot out for a while, but it's not geared toward zero DTE. It's more
Right.
for 30-day options or further out options, just the way it's all set up. Um, Kyle Leesman developed a trade automation toolbox
Hmm.
specifically for multiple entry iron condor. He wanted to trade it, and he developed this. He works full time, so
Yeah.
he wanted to be able to trade it while he works. So he developed this really for himself, and then he thought, "Hey, I've got this. Why not make it available?" And
Yeah.
so it's amazing that he's. It's amazing to me, like you guys, all these zero DTE traders are developing our own tools because the institutions aren't doing it for us,
No.
so we're
No.
having to do it ourselves.
Yeah.
And there's I really think that options trading attracts a lot of smart people and attracts a lot of programmers and traders.
Yes.
And so put all our heads together in these Discord groups and Facebook groups. There's a lot we can do for ourselves. And
Well, I think that's yeah, botting, it's we definitely get requests to build
yeah,
a bot, and it's something we're definitely aware of, and it's a very fun project, a very different project from backward looking things like that. But it is something that's definitely on our radar just because it's not going away, and more people who have zero day trading who work, you can't monitor your trade all day.
yeah,
And so,
yeah.
um, another question. So far, a lot of the material you've put out has been focused on credit spreads. Has there been other classes of mechanical strategies you've thought about or would like to research further for future presentations? Hedges, ratio spreads, calendar spreads.
I could do that. I have given presentations on calendar spreads, and in fact, I've thought about going back and trading those sometime just to refresh my skills on that. So that's definitely a possibility. Hedges, you know, in my opinion, the zero DTE with the stop are kind of self-hedged, so you don't really need a hedge.
Right.
Hedges are more for when you've got a longer term strategy on and you need protection. I've used the black swan hedge that Ron Bertino teaches, and I learned it from a friend of mine. and that did great in COVID in 2020. I made a ton of money on that hedge,
Hmm.
but in this market, it wouldn't have done squat because volatility isn't increasing. So, hedges, there's a cost with hedges, but yeah, I could think about that. I really only want to give I don't want to give presentations where I don't really know the topic intimately
Yeah.
enough to know what really works and really doesn't work.
Yeah.
So, I could probably do some presentations and give you some general information, but there's a lot of information on hedges and other types of trades out there.
Yeah.
I'll do it if I have an interest and it supports my trading. I'll be very selfish about that. So
Yeah. I love it.
ratio spreads I've done too, and that was the Black Swan hedge was a ratio spread. So
Yeah. It's a good.
yeah,
It's a
I
good.
can look into those. I'll add those to my list of things to look into, which is several pages long now.
It's a good sign when people. It's a good sign as
Yeah,
a teacher when people say, "Will you teach us more things?"
yeah,
So
yeah,
that's a shout out to you. All right, I've kept you for an hour, and you're awesome and you're sweet. I definitely want to have you back on to talk about botting because I think
yeah.
you're very knowledgeable about that, and it's like we said, it's definitely something that Option Omega is paying attention to. But two more questions. First off, what what is it like to be a Facebook moderator in a large group? Because I can't imagine you and Ben Decker and all that. What you guys, some of the crazy stuff you guys probably have seen
Yeah,
through the
yeah.
years. And so I just wanted to ask you that.
It's interesting. It it is somewhat challenging at times. I feel like being a principal in an architectural firm and dealing with HR issues was great training for being a moderator in a Facebook group. And, because everybody's complaining about something or everybody's complaining about, that guy over there, he's bugging me. And, learning how to deal with those situations. So it's great training. I kind of enjoy it. And because of that, it's challenging to me to find a way to respectfully deal with people's differences, allow them their opinions. Don't squash the discussion, just guide the discussion so it's more
Mm,
productive. And
yeah.
that's my goal as a moderator. And I think there's other moderators in our group who they're very good at picking out the conflicts. And then we have a messaging group among the moderators, and we'll make a copy of some statement somebody made or some post somebody made and say, hey, is this a problem or is this okay? And we get others' ideas and opinions. And like most of the time I'm like, nah, it doesn't bother me. And other people, man, that bothers the heck out of me. Let's kick
Yeah.
them out.
Yeah.
And so we will. The one thing that will get you kicked out is
Yeah.
trying to sell something. And if you're just coming to spam us, you just immediately get kicked
Hmm.
out. And there's so much of that. We try to filter that out in the questions that we ask
Yeah.
when people join. But then I think the bots figure out that
Oh, yeah.
answers that'll work
Oh, yeah.
in those questions. And then you start seeing a bunch of the same responses. Well, I know that's a
Yeah.
bot. So even though it's a logical answer, just because I've seen that 5 times, that particular answer, I know it's a bot,
Yeah.
and you don't get in the group.
It's like a
Probably we're being
weird mix.
probably we're being more selective in people we're letting in the group now, and causing less conflicts once you're in the group.
Yeah.
But
It's a weird mix of like trying to like fend off sharks while teaching kindergarten. You know,
yeah,
it's conflict and things
that's right. Children,
That's right.
pay attention,
Uh,
behave.
someone just said they lost your audio. I just want to make sure. Can everybody still hear Tammy?
Yeah,
Okay, sweet. Okay. Yeah,
can you
okay.
hear it? Okay.
Yeah. Last
Okay.
question. I try to ask everybody this. Sometimes I forget, but what is your favorite Greek?
My favorite Greek is theta, of course.
I knew it.
Yeah,
I know.
yeah, theta.
Yeah,
Love that decay where you don't have to do a thing and you're making money.
that's right.
Yeah.
That's right. I've always told when I was describing iron flies to someone before, butterflies, to say, well, particular iron flies, and they were like, they're new to options. And they said, what are you trying to like? What's the optimal goal? The optimal goal is where everybody in the market is scared and nothing is happening. That's what you want. Like
Yeah,
that's how
I
things
like that. Yeah.
all work. So, but
Yep.
Tammy, you have been awesome. I
Wonderful.
appreciate you. Everybody say bye to Tammy.
Yeah.
Just a shout out. Have been so kind to us, and you're so knowledgeable, and those things don't always go together. So I appreciate
Well,
you, and I appreciate what you do. And
thank you so much.
yeah, you're definitely
Yeah.
a friend over here. So anytime you want to come over and talk back testing, you do that anytime you want.
Okay, I will. Yeah.
So, all right, everybody. And with that, the last
Thanks
thing I was going to
again.
say, yeah, thank you, Tammy. The last thing I was going to say is Thursday, we're going to have a Cigar Lounge at 1 p.m. Eastern, and it's going to be me,
Oh,
Rusty, and yeah, me,
got my
Rusty, and Matt.
cigar.
Yeah. You have to get a cigar for the Cigar Lounge. Me, Rusty, and Matt are going to be on the Cigar Lounge. I will probably be the only one smoking, although Rusty has a pipe now, so we'll see what happens. But anyway, guys, we'll see you Thursday at 1. Tammy, again, thank you, and we will talk soon.
Anytime. Okay, thanks.